Welcome everybody to today's Lunch and Learn. Are you lender ready? Unlocking Capital with SBA Revolving Lines. I'm Adrienne Klein, Director of Programs and Community Engagement at Oregon Bioscience Incubator, and I am so glad that you're here with us today. So before we get started, just a couple of quick housekeeping notes. We ask that you please stay muted during the session. We also would love to know who's joining us today, so take a moment to introduce yourself in the chat and connect with others during this Lunch and Learn. I'll drop my LinkedIn in the chat so we can stay connected, but also joining us today is Kirsten Santana. She's our programs coordinator. She will share her LinkedIn profile in the chat as well if you'd like to connect with either of us after today's session. Also, please feel free to submit your questions in the chat at any time. We will be monitoring them throughout the session. Otrati would like to acknowledge the land we are all on, wherever we may be. Otrati conducts business throughout Portland and beyond and is making an effort to acknowledge the history of the area and work towards decolonization of the bioscience industry. To learn more about Portland's native, diverse, and vibrant community, please read Leading with Tradition, a document created by the Portland Indian Leaders Roundtable, and we'll also put that link in the chat as well for you. I wanted to let you know about a couple of upcoming events. We have the fantastic Think and Drink Trivia Night coming up on Thursday, July 23rd. We also have our next Accelerate Biotech Happy Hour happening on Thursday, August 6th. So please visit our website for any upcoming events. We'd love to see you there. Also to let you know that we will have a survey that pops up at the end of the session. And if you could take just a moment to fill that out for us, that would be really great. Your responses help shape our future improvements and ensure that we're bringing you programs that fit your needs. All right, so we are joined today by Matthew Schmidt, who returned to Portland area to serve with the SBA after growing up in nearby Beaverton. He holds an MBA from Johns Hopkins Carey Business School and brings extensive experience in leadership, program management, and organizational development. Matthew is passionate about helping entrepreneurs access the resources and funding they need to start, grow, and succeed. So please welcome Matthew.
Thank you for that wonderful welcome. Let me go ahead and share my screen. We will do this one. Share. Okay, everybody can see this?
Yep, looks great.
Perfect. All right. So I'm Matthew Schmidt. I'm the Deputy District Director here of the Portland District Office of the Small Business Administration. We're the only federal agency that is chartered with helping grow small business. We primarily do that through educational outreach programs, the 8A program, which is focused on federal government contracting with small business, and then the big one are SBA loans. That's kind of our main portfolio. I think I looked at the portfolio numbers this morning, and it's about $596 billion in small business investment that our agency manages. I have two presentations that I will be doing today. The first one is capital readiness. Are you lender ready? It'll be pretty short, it's about 15 minutes, and we'll start off with that one. My contact info is on this first slide here. You can also reach our main office if you go to www.worldwideweb.sba.gov/OR. It'll take you to our webpage, and we have contact info on there too. So, quick broad overview SBA loan programs. 7A loan is a simple fixed term loan that's done through the bank and credit union, and they provide up to $5 million for a 7A loan, fixed interest, fixed term. The Wall Street Journal prime rate right now, this morning was 6.75%, and then a bank will typically tack on 1 to 3 points onto that. The 504 loans are used for real estate and heavy equipment, and then microloans are done through other providers. And let's say MESO PDX can go up to $250,000. Business Impact Northwest can go up to $1.5 million, and those are local to the Oregon area. Just recently, there was a regulatory change, so you can now combine the 7A and 504 loan. You can have one of each for a combined total of $10 million now. So that was a recent regulatory change. We're going to dive into the 5 C's of credit. We'll start with character. When you go to a lender, they're going to look at your ability to manage your money, your background, your experience, and the biggest thing they're going to look at is your credit report. And so this is where the bank looks at the relationship with you. Capacity is going to be the most critical of these 5 because it measures whether or not you can consistently repay the loan. And that's when they look at the cash flow of your business. Capital is going to be what you are bringing to the table in terms of cash you have on hand. For the 7A loans, you don't necessarily need capital. For the 504 loan products that SBA offers, they typically want 10 to 20% down, and then they will provide the other 80 to 90%. So there's a slight buy-in with those. For collateral, they'll look at other sources of repayment. Do you have inventory on hand? If the business fails, what else is there? Or is there assets, commercial real estate, machinery, equipment? What else can they get? The last item, conditions, is going to be related to the loan in the context of prevailing rates and what is kind of going on with the industry. So, like when you're buying a car, shop around. Different banks might have different interest rates. It kind of seems, I don't want to say like a no-brainer, but I've had people call and ask, hey, is this a good rate? Should I take this loan? And I'm like, have you looked anywhere else? The banks want your business, but they also, you as the consumer are buying a product and you need to shop around for that best rate and figure out what you're willing to negotiate with the bank. Um,
Hey, Matt, one quick question already.
yes,
Um, Barbara wants to know, do businesses have credit reports or are they strictly personal?
it's a mix because they can ask typically when you are seeking a business loan, they want tax returns for the business. So they're going to evaluate that from that financial perspective. They'll look at, gross revenue, net revenue, EBITDA, interest before earning tax deductions, and amortization. So there are a number of factors that they will look at that factor into the business and your personal credit. So when they look at your character, they're looking at these 4 criteria, understanding your credit. So they have, and this kind of ties in with that question. There are 2 types of credit scores that they're going to assess lending to an individual and a business. The distinction between personal credit and business credit is what is going to help navigate those funding options. The personal credit is their payment history, credit card usage, loan payments. The business credit is going to look at the credit worthiness of the company, and that is independent of the owner's personal credit. They're going to look at the business's financial behavior, such as have they been paying their bills on time? Do they have any other loan products? What is their, payment history? How does all that factor in? So, personal credit score, there are 3 reporting agencies. You are allowed to pull your personal credit from each one at least once a year for free. I would highly recommend you do that because if you discover something that's not reflective of your personal financial history, you can ask for a correction. So this is going to help with your FICO score and how the banks evaluate that. It may seem simple, but sometimes, people run into cash flow issues. It's best to pay your loans on time. Don't exceed your credit limits. Only apply for credit when you need it. And also check with your credit agencies in order to ensure that there's nothing out there on your personal credit. We've seen some things where a number of people, when they check their credit through one of these three reporting agencies, sometimes they actually find a fraudulent item where someone has tried to take out credit in their name. So it's always beneficial to do this annually. Financial capacity. When you go to the bank for any type of business loan, they're going to want 3 years of financial statements, 3 years of tax documents, personal financial statements, a debt schedule, and then your earnings projections. A lot of times the questions come up, hey, I don't have 3 years of business. How do I get money? This term is not the best. Sometimes startups, they need to use the 4 Fs: friends, family, fools, and fiends. It could be a way to start your business. I think Jeff Bezos borrowed about $200,000 from his parents when he started Amazon. So they're initial shareholders. An alternative to that would be the micro lenders. If you are starting out, some of the micro lenders here in the Pacific Northwest, Business Impact Northwest, MISO, PDX, would be places to start. And they will, as micro lenders, will specifically work with businesses that don't have this history. But there's also like an educational component where they will require you to take a class on managing inventory or credit history and reporting in order to receive funding from them. One of the biggest things banks will look at is just your ability to repay. And sometimes that may be your current, what they would call your W-2 job. If you're working for another place and trying to start up on the side, they're going to look at your ability to repay until your business is up and running and generating enough revenue where you could potentially quit that W-2 job and focus solely on your business. Kind of understanding capital, the skin in the game. If you have cash on hand, a bank always likes that. Or in terms of the 504 loan, where you put 10% down towards the loan, they consider equity contributions as a great asset, and it helps your balance sheet overall. Collateral, typically your house, your car. Some people don't want to put that stuff on the line. There are other ways of managing this, but it depends what you project for your business and what risks you want to take. Unfortunately, we know that small businesses can and do fail. So there has to be, as a small business owner, you assess the risk and make that decision of what you're comfortable with. Loans typically under $200,000 do not require a collateral guarantee. SBA loans over $200,000 typically do. Conditions. This circles back to how I talked about when you're working with the bank, shop around. I've had people where they were able to get better rates at, shorter terms or vice versa. Everything is a negotiation with that loan officer. Unfortunately, I don't want to say haggling. This could be like buying a car where you're negotiating over the length of the loan, the rate, and what other guarantees. You don't have to take a deal. One of the big things is doing that shopping around. is a 5-year deal or a 10-year deal better? Does someone offer you a better interest rate, or, is it a fixed rate? What is the bank looking to do? Is it conducive to your projections? What do those projections look like in a worst case scenario? Are you still able to make the loan payment? So that is one of as the consumer, as the person purchasing the loan, that you should consider. If you need help, you have your SBA local district office. Here in Oregon, we have the small business development centers. Those are co-located with a majority of the community colleges, but they have people on staff to provide free and confidential business counseling. There's also SCORE Mentors, the Women's Business Center. We have a new, which is why that's a different color, the NorCal VBOC. We have a new Veterans Business Outreach Center under a 1-year contract. So they are here for veterans. If your business has been in operation and you want to see what banks will compete for your business, you can utilize this lender match tool from SBA. You put in some basic information about your business, and it is going to try and match you with a lender that would be interested in your business. And it's kind of like a dashboard system. So if you get multiple offers, you can see the term, the rate, and whatever else. And that's your entry point to starting that negotiation with a loan officer. You're doing the survey, and that's it for that presentation. And I kept it pretty quick for that. Are there any questions for that one?
I actually have one for OBI. So as you know, many of our startups are pre-revenue or early revenue. At what point does it make sense to start talking with a bank, even if they're not ready to apply for a loan?
Probably at that, I would say that 2-year point, because they're going to have enough financial data where the bank might make a decision. Typically, banks want that magic number of 3 years. But if the bank won't give you a commercial product, there's a possibility they'll give you an SBA product. By congressional law, the SBA is not allowed to compete with banks. Typically, banks would love to give you their loan and they keep all the money. But if there is an amount of risk, and that's what really the SBA is for, it's a risk management tool for the banks, because when small business takes out an SBA loan, the bank pays a fee to the federal government, and the federal government backs the loan 70, 80, 90%, depending on the risk model. So you could say they're hedging their bets, for better or worse. So probably about 2 years if they're pre-revenue. That I'm sure they would have some documentation that would be of interest to the bank, where they can start kind of working those projections and moving on from there. The second presentation, unlocking capital, maximizing the power of SBA revolving lines. These products are relatively new. A lot of them just rolled out here in May, and we will go over these. The SBA Express loans have been around for a while. Those are typically loans under, I think, $500,000. The next slide has the exact number. Cap lines are relatively new. These are for working capital, contract work, seasonal work, and builders. Typically, for example, you could get a cap line if, as a builder, you want a contract to build a building and you need capital in advance to purchase the materials. So it's a working capital line. There's also the Export Express working capital program. the working capital pilot program, the new MARC loans for manufacturers' access to revolving credit, and the enhanced international trade loan. Before we started this meeting, Adrian had mentioned that she just saw something called Scale. That is for a logistics loan. They just pushed out the press release on that this morning. I haven't even had time to read it. So that is also something new to look into. The Express program summary, this is an expedited process for the banks to get people loans. It's kind of a term loan or line of credit. They're processed through the banks. They have a delegated authority, and it's based on risk assessment, and it just reduces processing time. I think the shortest I've seen has probably been like a 2-week loan process on this. So for the Express program, SBA guarantees the loan 50% to the bank, and the maximum loan amount is $500,000. Current Wall Street Journal prime rate right now is 6.75%. So if you're taking out a loan over $350,000, you're roughly going to pay that 6.75% plus a max of 3% on top of that. So just under 10%, like 9.75 there. Non-revolving, and this is the caveat, some non-revolving 7A loans could be sold on the secondary market. So another bank might buy out that loan from a bank if they want to sell it, but they're not allowed to change the rates. Collateral requirements on the SBA program. For loans of $50,000 or less, the lender is not required to take the collateral. Loans over $50,000, they'll follow all RIN policies. Typically, if it is an SBA loan, they will file a UCC with the Secretary of State. So that would put conditions on what you can and cannot sell and how those funds have to be used in the event of liquidation. Basically, this slide is more lender oriented. Talks about credit analysis and just there's kind of a checklist that the bank has to go through first in order to look at, like, if you're not eligible for a commercial loan product from the bank, then they can look at SBA loans and accommodate you there. Express loans as a line of credit may not exceed 10 years. The lender cannot charge a renewal fee, and that's about it for the Express loans. The 7A cap lines, these are the relatively newer ones, the working capital lines of credit. The working capital can be financed short-term working capital operational needs, can be used for contracts or seasonal increases of accounts receivable and inventory. Pretty simple. They follow the same standard guidelines as the 7A loans. You have a max limit of $5 million. You're evaluated under the same criteria as the 7A requirements. Maximum maturity is 10 years, 5 years if it's for building and construction, and they do require an exit strategy. So you have to be at zero balance by maturity of the loan. Working capital lines can be used to refinance short-term revolving debt. They cannot be used to acquire fixed assets or pay delinquent taxes. If you pay your taxes, it's a big no-no to use a loan for one of these. The seasonal cap line, used for accounts receivable and inventory. You can also use it for associated increased labor cost. Seasonal cap lines would be possibly used for the best example would be farm work. If you had increased labor costs due to harvest needs, you cannot use it to refinance debt, change of ownership. So you can't use a cap line to buy a business. I know that can be pretty popular for some science companies. As they grow, they buy other companies in order to obtain patents and other methods of acquiring businesses. So you cannot use a cap line to buy a small business. Gonna jump through this. Contract cap lines would be if you had a government contract, let's say National Institute of Health wanted you to produce something for them, and they wrote you a contract, but you don't have the capital to fulfill it. This would be a way to finance your materials, labor, and overhead in order to complete that contract. And that would be something that you would probably price in with your contract negotiations with that agency. The working capital pilot program, typically this one also follows the same 7(a) terms. $500,000 with a loan guarantee, 85% at $150,000 or less, 75% if it's over $150,000. Loan maturity is 5 years, 60 months. For the working capital pilot program, this is a little different from our standard SOP. So you have to have 12 months of operation as opposed to 3 years of business experience. That's one of the main differences, but this also is going to tie into some of the NAICS codes I'm going to talk about here in the next few slides. I'll just give you guys a couple of seconds to read this. I don't want to go through all of this. This is an asset-based loan advance rate scenario. If your bioscience company is producing some sort of medicine and you need materials to purchase, you have equipment, this is what they kind of look at in terms of how to guarantee various assets and product that you would be producing. The use cases for working capital pilot. So large equipment manufacturer, revenue in excess of billings or cost in excess of revenue, would be trying to work your balance sheet accounts. Government contracts, domestic and international sales, and a young company with an abundance of collateral. Not necessarily oriented towards a startup, but if for some reason a startup had a lot of collateral, working capital pilot program might be an option for them. The new Mark loans, this portion here is what is probably most applicable to OBI and your clients. It's like an SBA Express loan, but they have stricter eligibility requirements. So they have to be engaged in manufacturer and NAICS codes 31, 32, or 33. 31 is related to farming, milk production, meat production, butchers. It's a pretty broad code. Sector 32 and 33 would be most applicable to your client or clients. Basic chemical manufacturing, pharmaceutical medicines are under Code 32. Code 33 would be advanced metal material manufacturing, including medical devices. The mark loans are underwritten like the standard loans, and they're treated the same. It's just such a new product. I think we only have 5 of them so far in the state of Oregon. Um, and it just creates a revolving line of credit for those specific industries. And this is in relation to bringing manufacturing back to America, and working to guarantee that we have domestic capacity in order to support ourselves. The loan maturity on these mark loans can go 10 years revolving and 10 years term for a combined total up to 20 years. They do have annual maturities, so there are certain time periods or hacks where payments have to be made as you borrow and return capital. For the mark loans, that collateral piece, the lender has to be willing to place a lien on all their assets of the business, including equipment and real estate. They simply won't give a line of credit without that. There are also 2 types of service fees on the mark loans. There's an annual review fee, which can be up to 50 basis points annually, calculated on the maximum loan amount, or an extraordinary service fee, which is up to 2% of the asset-based loan. When they look at the structuring and underwriting of a mark loan, whether it's revolving or term, they want to see that the borrower can demonstrate a 1-to-1 debt service coverage on either a historical basis or within 2 years of the projection. And the debt service would be based on like the 10-year span of the loan life. So this post closing is more for lenders and banks to look at. The mark loans are dispersed as an open line of credit. There could be a cap that the bank establishes, and they can also request to increase the loan if an annual review supports a higher loan amount. So if you are using a mark loan to produce a medicine and you're knocking it out of the park and you need more capital, you can always ask for an annual review to increase the loan amount if you need that to scale your business. The bank ultimately has control over the disbursement, and that would be documented in your terms and conditions. One of the things that I would note is, as a small business owner, read the terms and conditions. And that is something before you ever sign that loan, is to go over the terms and conditions of the loan. Make sure you know, as the borrower, what you are signing. We here at the district office, we receive customer complaints essentially, and when we reach back out to people, we're like, hey, your terms and conditions said this, and they're like, I didn't read that. It's kind of brutal to be like, well, you signed a document for a federal loan from the government, and the government is not kind when you become delinquent on it. And it can affect more than just your personal credit. There's a system called Cavers. If you default on student loan, an SBA loan, cavers can prevent you from buying a house. So there are other effects of what you are signing than just if you were signing from a bank. If you took the commercial product from a bank and you default on it, you hurt your credit score. But from the federal government, there are a few more effects that you would feel. So this is one of those things. Read the terms and conditions and know exactly what you are signing because you are obligating not just yourself, but your business to a contract. Um, Lender fees are relatively the same because they're outlined in the SOP. Um, Make that bank compete for your business. Don't talk to just one. I can't reinforce these things enough. So many times we've seen people, hey, I took out a 12% business loan with this lender. Was that a good deal? And I'm like, no. No, you probably could have gone 6 or 7% if you had gone with this other bank, but they're locked into it and they're making interest only payments up front, and it's going to be a while before they even touch that principal. Just do your homework, shop around, and if it doesn't seem like a good deal, just walk away. There's no, I can't stress enough, just walk away. You will figure it out somehow later, and it may require delaying the business, but it's just one of those things. We're gonna skip over the grocery guarantee. I don't believe you guys are growing anything for that. ITL. Revolving loan product comparison. This is where we can look at the different working capital. Mark revolving loans, SBA Express and seasonal capline are open revolving. The Mark revolving and term are for fixed asset leverage. The Mark revolving with various caplines are for borrowing, and the Mark revolving and contract capline are project oriented. Feel free to screenshot this. I know they're also going to send this out so you can read the differences between the different loan programs. What would be most applicable for this group today would be the Mark loans and the working capital pilot program, the center column and the column on the right, and it has the details of those loans on this. This is simple breakdown of product positioning for the working capital pilot program. They're looking for $1 million to $5 million. Mark can go from, it says 0, but essentially 50,000 up to 5 million. SBA Express is $500,000 and under. SBA line of credit options, some different lines of credit. You can have, the Mark revolving secured by fixed assets or just an open line of credit. A lot of these would be, when you sit down with the banker, would be determining which product is going to be the best for you to utilize. If it's simple, under $500,000, it could just be an SBA Express loan. It would give you a fixed interest rate with a term, and that could be best. Other cap lines might work. It just depends. I would recommend people call us if they're looking for a certain lender. Just reach out to us. There's also, if you Google SBA lender reports, you can do your own search and look at a specific loan product and then see who the top lenders in the state of Oregon are. And that would be the start of your homework of, hey, I'm reaching out to these 3 lenders. They've made loans in roughly this amount size that I'm looking for. And that's a point to start looking at what lenders should I be talking to and where do I go from there. We can open it up for questions. We're here to help. This is my contact information. And if you really want to talk to uh, somebody if you want to discuss export finance or you need a personal introduction to a bank, John Brislin is the finance manager. If you look now, his new title includes Northern Nevada, Hawaii, and the American Pacific Islands. John is a former banker. He'd been in the industry for like 40 years, and then came to work for SBA kind of as his retirement gig. He is an amazing wealth of knowledge. If you have a great idea and you want to reach out to a bank, you're like, hey, this is what I'm looking for, or I want to explore a March line of credit or something else. His specialty is manufacturing and trade. This is the person to reach out to. Call me if you need general help. Call him if you have a very specific and finance oriented question, or you potentially want him to review a financial document because he will give you a banker's perspective on it.
Excellent. So as people put their questions in the chat, I do have a couple of questions for you.
Yes.
What are the top 3 things lenders look for when evaluating a small business loan application?
They're going to look at your personal credit, the revenue from the business, and any assets the business has. Those would probably be the top 3.
Also have, how can bioscience startups, which often have long timelines to commercialization, position themselves as stronger lending candidates?
That's a tough one because I would say they probably need to market themselves as something either niche or that is going to have a long-term viability. Um, I'm gonna go back a few years because uh, as you introduced with my bio, I got my MBA from Johns Hopkins, and I had a couple of doctors. And we had a large number of doctors in our MBA program that were trying to learn better how to manage their business. A couple of those doctors were actually in the pharmaceutical sales. And there were some interesting discussions about how do you bring a product to market when it has, an FDA testing period of X number of years. That's one of those concepts of how do you keep how do you show revenue or your pre-revenue? How do you keep going with this? Some of that might be you have to pursue grants, possibly from the National Institute of Health. I would always look there, either Institute of Health, Department of Agriculture. When we talk bioscience, we're not talking just medicines for people. Are these medicines applicable to farm animals? Uh, I understand. The new director here in Portland came over from USDA, and his big thing was, he was pulling my ear the other week. He's like, dude, they just discovered, I think it's the screw worm down in Texas, that it's the effect it could have on the cattle industry is huge. And I haven't had the opportunity to Google it, but if someone could come up with a medicine for that, the regulatory hurdles probably for animals through USDA and FDA would be quicker than human trials. So, if you can convince a bank, hey, this medicine or this product has an application for it, and this is our timeline, the banks might be willing to do a commercial loan as opposed to an SBA product. It just depends. And also, it kind of ties into whatever the bioscience solution is, they're outside of government funding. There's probably a private equity or an angel investor that would be interested in funding this. It's just a matter of finding that person. Um, SBA has something called an SBIC. Those are small business investment companies. The only one in the Pacific Northwest here is called Puget Sound Growth Partners, and they are up just north of Seattle. And what those guys are looking to do, they have like a $300 million war chest, and they are looking to buy companies that are potentially pre-revenue but are generating or have, a product. Uh, I met with them probably a year and a half ago, and they said the last company they bought was about a $25 million company. So that's another alternative because each of these SBICs, while they're licensed by SBA, some of them have different goals. Some of them are looking to fund startups. Others are looking to buy companies that are already in existence, generating millions of dollars in revenue, but they want to buy them, do the private equity thing, grow the company, and then sell it again to someone else. So that is an option. And I would actually, let me check something real quick. Yeah, SBIC. Yeah, sba.gov/partners/SBICs will take you, if you just Google SBA, SBIC, there's a link. You can find an SBIC directory and it'll tell you what companies are there. And then you can sort by investment strategy. Some are looking for buyouts, direct lending, early stage, early venture, expansion, growth equity. They have different fund types. So you guys could search for that and find a company and then potentially reach out to them because they have their investor relations contact listed. So that's a totally another way to find essentially private equity through the SBA.
Great. That's an amazing resource. I went ahead and Googled it and I put the link in the chat. So if anybody wants to grab that right away, you can do that. I have one more question before I can hand it over to somebody else. If someone is declined for financing, what are the first steps they should take before applying again?
That would be probably a great discussion with the loan officer. Would be to ask the loan officer, like, hey, what was flagged and what can I do to fix that? Because they might have some specific insight into what the risk model flagged. That'd probably be the best bet.
All right. Anybody else have any other questions that we can throw Matt's way? Also want to let you know that while you'll get his contact information also in the slides, but we'll also put it in the body of the email that we'll send out with the recording of the session along with the slides. So you'll probably get that by the end of the week, if not sooner. I don't see any other questions rolling through, so I think we can say thank you for joining us today. A special thank you to Matthew for sharing his expertise and highlighting the many resources the SBA offers to entrepreneurs and small businesses. Again, I wanted to say that this session has been recorded and we will send out the recording, the slide deck, and any other helpful resources later this week. Before you sign off, just know that a brief survey will appear on your screen, and we would greatly appreciate your feedback as it helps us to shape future programs and topics that are most valuable to our community. Thank you again for being with us today, and we look forward to seeing you at another OBI event soon. Thank you so much, everyone. Bye.
Thank you.